space. Sergey, you shall be first.
Well, we got PayPal coming on board. At least pseudo crypto that they're gonna start hopefully in early 2021. When I say pseudo crypto, what I mean is it's a custodial model, so they hold apparent crypto, and it's only used within their platform. So that means you cannot transfer any BTC or ETH from the outside or to the outside of their ecosystem. So it's the same. It's the same system that Revolut uses. So with Revolut, you can already buy BTC, but it's kept on their platform, and the price is a little bit different to the spot on markets. And it's the same a couple of other projects use. So, but nonetheless, it's a great step for adoption. It's a great step for our industry. Love it.
Peter, what do you think? How it's look? Yeah, how it's look for the finance industry?
Well, this will be another challenge, but it's actually, it's a good gesture from PayPal, I guess, because they're trying to make this as a test bed, and then they probably maybe collaborate with other central bank of the major countries. I think all they're gonna do is actually trying to input their one of the platform into the markets. So I think there are good opportunities for the individual investors as well. So we'll see. So I think the basic concept of the blockchain is the major one for the smart city is the building of the cryptocurrency into the cities, and so we just call it as a city token, or the smart city token, whatever it is. I think this kind of gesture from PayPal will make something much more, practical in the next move. Yeah.
Interesting. Daniel, what do you think?
I think these are the most impactful news this week, but also the most misinterpreted news this week. And I have somewhat of a contrarian view about it. I don't think this is positive for Bitcoin hodlers, to put it in plain terms. The reason is as follows. No one is going to go out of their way to go buy Bitcoin, to go buy services and pay in Bitcoin. That is automatically converted to fiat. So really all the expenditures that are going to come denominated in Bitcoin are actually from existing buyers that already have Bitcoin, which means we're going to have, if this actually becomes mainstream and there's actually a lot of transactions, most of these transactions are actually going to be sell transactions from hodlers or from people that are thinking like of Bitcoin long-term. So really this is going to create downward pressure on the market. I don't think it's positive if it's successful, but most likely it's not going to be widespread enough. And then it's just going to be like a ripple in the water and not much will happen. From a reputation standpoint, of course, it's important that PayPal says, hey, we're accepting Bitcoin. So helps reputation wise, but if people are thinking, hey, is this a catalyst for price? I doubt it. If anything, it's a negative catalyst.
Interesting. And Vance, what do you think? How it looks on your side?
You said Vince?
Yeah.
Sorry, you're speaking to me. Yeah, sorry, my apologies. Yep. I kind of look at this probably a different way to the rest of you guys, probably because of my background. I'm a fiat person, and I'm very interested to see what things are doing. I run a wallet, and I used to manage about $1 billion of client funds and about 16 billion a year of transactions. We're a lot smaller than PayPal. The name of my group was PaySafe. It's quite big as a wallet, but it's nowhere near the size of PayPal. I was looking at the news. I think it's interesting that PayPal would open out to Bitcoin. I think anyone could open out to Bitcoin, but what I really see is that I don't think it makes a mass difference in terms of adoption. Let me put it this way: there are three vortexes. there's money into Bitcoin, and the ability to take fiat into Bitcoin has been eased, but still prohibitive. It's not real time, it's not easy, and it requires a lot of regulation. Then there's Bitcoin itself. There's a lot of money in Bitcoin, massive cap, 186 billion. Nobody really knows where that's going and how much of it's used in retail. The propensity to use Bitcoin at a point of sale, to pay people. For the common man, I mean, I don't think this is happening. I don't see it happening. Maybe some of it's happening. It's happening a little bit in high risk, particularly high risk gaming and gambling. The reason it's happening is because the system's an oxymoron. It's happening there because MasterCard and Visa and the schemes have put prohibitive charges because of their schemes on chargeback. Bitcoin and crypto in general has become a favored currency because it removes a lot of the friction. You can pay with Bitcoin and nobody's going to scream your credit card's been stolen next month and it wasn't you who spent and lost 32 million in the local casino. I'm exaggerating the point a bit, but so Bitcoin's very friendly for crypto companies. But notwithstanding the third part of it is taking money out and taking money back into fiat. Why would you do it? How often would you do it? Why would you need to do it? And why don't you leave your money there? So what's PayPal doing for us? Well, PayPal is not it's an e-commerce company. First and foremost, it's an e-commerce company. And what do e-commerce companies do? E-commerce companies enable you to take money, fiat, or any stored value, doesn't matter whether it's Bitcoin or fiat. It allows you to put it into an e-merchant community. That e-merchant community could be anything from shops online, gaming and gambling online, right through to an exchange online. So, could you pay Kraken via PayPal? You could, but would you do it? Not really. You wouldn't pay that route because it's cheaper to pay from your bank to Kraken than it is to pay via PayPal. It's prohibitively expensive. So as an e-commerce measure, it's not particularly interesting unless PayPal is particularly interested to allow it for a high risk. And I think, to be honest, there's a small possibility that PayPal are seeing that in the high risk area, Bitcoin is quite an interesting concept. Why? Because for high risk, when you're doing card transactions and you've got chargebacks, follow the money here. You have a casino in Las Vegas. I'm just giving an example of high risk. This applies to a lot of other things. You have a casino in Las Vegas. It wants to take money in. And you can pay in cash by going to the casino. That works quite well. And you can pay with credit card, but you've got a high risk because somebody might lose the money at the casino and claim the card was stolen. That's not going to work. And then you've got PayPal as a payment method. So what do you do with PayPal? Well, you take money from your bank, you move it into the PayPal wallet, and then you can take it from the PayPal wallet and you can put it in the casino. But the good thing about PayPal is they know a bit more about you than an anonymous card where you don't know where it came from and it's been presented for the first time. PayPal knows your history as a customer in the wallet. So if casinos get charged between 5 and 8%, then, it's quite good and it's quite clever that PayPal are actually starting to look at Bitcoin in a high risk scenario. Anyway, my summary is, I don't think this move is a massive move. I think it's a good signal to the market. I think within the remit, like I think the colleague was talking about earlier on, in a closed loop scenario where Bitcoin can be traded with other users in a closed loop wallet ecosystem, things are okay. Is it going to make a massive difference to the market? No. What would PaySafe's major move be? Probably that they could present that as a payment method in and out of the high risk business potentially. I don't think it's massive. I think there are a lot of other endemic and more exciting things to talk about in terms of cryptocurrencies in and out of Bitcoin and leveling the playing field there. So I don't see this as a massive move. I'm wondering whether any of the other panel can understand the motives of PayPal to want to support this.
Well, I mean, of course, like I agree with you in terms of like that most likely there's just like a small ripple in the water for the reasons I explained before. I don't think it's gonna like meaningful, and if anything, it's going to bring down on pressure. But in terms of what is the motivation of PayPal, well, there's two motivations. One is defensive in the face of a disruptive technology, and then second, it's a new segment of transactions that they otherwise would not be serving, that somebody else is going to come in and step in and serve them. So if my hypothesis is true that a lot of the people using this service are actually hodlers that are the ones that are going to spend the Bitcoin that they have accumulated, as opposed to people buying Bitcoin to then sell it, then that is a market that otherwise PayPal wouldn't be able to serve. And also, if you look at the fees that they're charging, they're exorbitant. I mean, it's like on average about like 2%. So it's also a juicy market to get into.
Interesting. And what is the next big news around this week? What do you think?
Well, Bitcoin is through 13,000. That's another big news, but I guess that follows on from the PayPal thing.
Yeah.
Coming back to PayPal a little bit though, I don't think it's going to be marketed as a transactional thing. I think they're going to do it the same way as Revolut has done it. As in, you have a section for crypto in there in your wallet, and you're free to move it from your balance into crypto and back at the internal rate of PayPal. And so in other words, if you want to spend, you need to move it from crypto into PayPal yourself and then spend it. I don't think it's going to be an automatic move to say that that it's going to be I don't think it's going to be an automatic transaction, so to speak, right? Having said that, it depends on how PayPal would actually guarantee the amount of Bitcoins. Now, as far as I understand, they work with Paxos. And I think what that means, and I hope that means that, is that for every Bitcoin somebody buys inside their ecosystem, the PayPal would actually buy one on open market to guarantee it. However, like looking at the mechanics of things, I don't think that's going to be the case. I think what's actually going to happen is they're going to have a little sign of Bitcoin in their wallet, and for every Bitcoin somebody buys, they just say that they will honor it when they sell, and not actually place an order on the crypto market. Now, depending on how that plays, it either could be a good move or a bad move as far as hodlers are concerned and as far as price pressure is concerned. So I guess we'll wait and see. But by all means, I don't think anyone is going to run and say, "Geez, well, I can now pay in Bitcoin," and that'll be great. I mean, every time I have to sell Bitcoin to pay for something, I cry inside. And and I'm sure there are more people like me than the other way.
Peter, what do you think? What is one more big news in finance and in crypto space and smart city on this week?
Well, actually, one of the things that I'm just learning from Facebook, the PayPal story this week is actually giving me some sort of the signals that because of some of the kind of these movements, I was actually in the middle of discussing with Facebook side and also the PayPal a couple of years ago. So I think I think that it is interpreted in the PayPal's entry into this cryptocurrency market, asset market, is actually largely driven by the experience of joining the Facebook Libra alliance last year. But at the time, PayPal attempted to enter the global payment market through the Libra. But when Libra encountered the regulatory wall in each country, I think the Libra alliance was kind of another issue for them. So the gesture and the kind of the movements of the PayPal will be something different this time. But this kind of gesture from the PayPal is kind of the impact in the smart city projects. So what I'm thinking about bringing this asset market with the cryptocurrency is probably maybe my side is one of the projects is actually building up the city token, to strengthen the service model, like energies and finance, using these cryptocurrencies. And I think this is another the models that we actually trying to benchmark. But yeah, but I'm actually seeing that in other possibilities, and I don't know. I cannot say that is negative or positive, but this is one of the kind of the bridging model for the PayPals to do something next and what's going to happen. But I'll bring the kind of the regulatory tech sandbox using this kind of model into Vietnam and Ukraine this year and next year. So that's my plan. And yeah, that's it.
Interesting. And what is like a negative side of this news? What do you think, Sergey? What is like a more negative? You mute.
I mean, negative side of PayPal, I guess we already discussed, right? Because it could be, and I just said it could be just a gimmick, to tell the truth, and not really buying any bitcoins on the open market. Having said that, I think the greater some of the other big news, and it follows on the previous one, where the companies like Square started actually accumulating Bitcoin reserves, right? So, and I think that's a very positive move as far as the industry is concerned, and that is the move that actually reinforces the fact that, well, I hold the opinion that Bitcoin is not really transactional; it's actually a store of value. I mean, it's great to transact and it's simple enough, but as a transaction to pay for a cup of coffee, I think it's pretty bad, right? It's hard for people to count the number of zeros to put in before you pay for a cup of coffee. So it needs to be a simpler alternative and equivalent. And obviously a spot trade with the dollar straight away, I mean, that's probably a good solution. But as a transaction, I don't think Bitcoin is a great one. And anyone using crypto to pay for things like would realize that. To tell the truth, recently I liked paying in uni, right? It's just like uni is like you're close enough to the dollar, and then it's easier to count. But that's just me. Now, the other news is basically Filecoin launching finally, right? Now, Filecoin is an interesting one. They've done an ICO 3 years ago, and it was I think from memory it was like one of the biggest ICOs out there. And they played around for 3 years, right? And they finally launched a product. And the market, at least on the onset, they took it exceptionally well, right? However, the price has since collapsed. Well, collapsed to back down, so it was a pump and dump scenario. And but that's interesting to see and interesting to, like, I haven't played with Filecoin product yet. I do intend to. But I think it's worth looking into and what's happening in the industry. I mean, locally in Australia, if anybody cares, we had the little like neobank scenario on ASX, where a bank without a product, where a startup without a product called DAO, right, as in like cookie dough. Sorry, called dough, as in cookie dough, where they listed, they done an IPO for ASX for $6 million, and they pumped 5 times without a product, saying that they have a closed beta in US apparently. So that's like, now that we talk about that's really a good time to start thinking about pump and dump in crypto and all these other things, right? So basically, traditional markets are still there as far as pump and dumps are concerned, and it's really funny to see. Yeah, but that's pretty much it. I think well, we got Filecoin is an interesting one that I think we should talk about, and what are everyone's thoughts about it? That would love to know.
So actually, Filecoin reminds me of storage back in the day, like STORJ. Did storage ever actually like what happened with it? I haven't heard of it in ages, so that could be like a good way to figure out what will happen with Filecoin.
Wait, I'll just download some info. 1 sec.
Actually, you can share your screen. if you wanna.
I'm using a different computer. Well, basically what happened is that it pumped and then it just like within the first couple of hundred. So there was a lot of excitement with it. But once again, unfortunately, I haven't used their product. But as far as the initial thing is concerned, they did have a bit of a resurgence since September, up and down. But to tell the truth, I think it's like still, I think there's a lot of manipulation going on there, because I mean the volumes are not huge. The volumes are only 20 million and a market cap of 75. So it's so it's still kind of there. I'm sure the guys are doing great work as far as file storage is concerned. But now they have Filecoin to look at as well.
Yeah, I think one of the issues with this type of ecosystems is that I would not trust to put my files on it until I know that the network is stable and that it's going to be there in the long term. Because if the price collapses and you have all the node operators simply like running for the hills, then I have no security that my data is going to be there in the long term. So I don't trust the whole sharding of my data across a bunch of nodes that I don't know they're going to be there in the future.
Yeah, it's same for me. I totally agree with Daniel. Peter, maybe you can continue.
And hold on, don't get me wrong. I mean, I'm not against the principle of it. I think like Filecoin and storage are like definitely like fine ideas. It's just that the fact that they run on a public blockchain with a utility token attached to it means that they need to create a, they have the added challenge of having to build a sustainable token economy. And that is very hard.
Mm-hmm. Okay.
All right. Good to see you, Peter. Take care.
Yeah, see you.
Yeah.
See you.
Bye.
See you in our office actually tomorrow.
Tomorrow,
If you
yes.
wanna.
Yeah.
Yeah.
I guess in the meantime, like other pieces, like another piece of news that I saw that is interesting, and this came up actually 3 hours ago. The SEC ruled against Kik, which was the other messaging platform. It's a small settlement. They have to settle for $5 million. Some people say that this means that Kik is gonna go out of business. I mean, I don't remember how much they raised, but like $5 million should be more than enough for them to swing it. But the fact that the SEC is ruling against them, and this happens like shortly after they ruled against the Telegram ICO, the main takeaway from this is that now it is very clear that anybody selling tokens in a SAFT arrangement, it's just not seen as something legal by the SEC. So
well, good of them to come to the party 3 years later, but yeah. So.
Yeah, no, exactly. What I'm saying is like the people knew that it was likely not legal, but now there's kind of like enough actual legal precedent to say like that shouldn't even be attempted. There's no longer a gray area. But I agree with you. I mean, like they should have known well a long time ago.
Okay, fine. What about news on your side?
I think Vince is on mute.
Yeah.
Yeah, Vince, I think.
Yeah.
Unmute?
Yeah. Now you mute. Yeah.
Right. Can you hear me now?
Yeah.
All right. My apologies. I'm very simple. Give me a choice of two things, binary, and I always get the wrong side of it. Yeah. I've been not following Filecoin a lot. I really, I think they have massive potential, but I really don't understand their business strategy fully at all. I can think of 1,000,001 things you could do with a company like Filecoin. I used to work for a company called Swift once, and Swift moves pointers to money around the world. It doesn't actually move money, it moves pointers to money around the world. And what it doesn't move is all of the documentation that you need to move with the money. So, I would have thought that Filecoin would have been probably one of the world's top probable blockchain embodiments that could run a parallel network next to Swift to guarantee the integrity of the documentation that you need to carry when you show the purpose of funding and the remits for good. So there's 1,000,001 different applications I could think of that would be extremely exciting and would fill a big gap. You know, why is this useful? Well, in the banking and payments world, one of the most important and profitable areas you can ever work in is when you're doing high-risk payments. For example, Pan-Africa. You're never sure if people are moving money because it's real coffee or real copper or real commodity or not. People are moving money around on the SWIFT network, but you haven't got the documentation to go with it. So you end up with, you know, fairly large regulatory fines in the orders of hundreds of millions of dollars internationally. And I think you saw probably a few weeks ago, there was another leak in the States. And it was pointed out, I think that banks, the tier one banks, like I think in Europe, Deutsche Bank was incriminated. There were several others. They'd lost, you know, they'd been accused of laundering multiple billions of dollars of money. So, you know, Filecoin is very well placed to be able to do very, very secure transit of documentation related to payments and to anonymize the bits that aren't supposed to be seen and to legitimize the ones that aren't. Now, that's got two major impacts. Number one, it reduces the risk of regulatory fines when you endorse a system like that. You actually know the reasons for payment. So I'll give you some examples. We have a bank in Europe. I won't mention any names. And the bank in Europe got a regulatory fine of 650 million. Quite a small fine as fines go. It got a fine. One of the problems was one of its network partners sent a payment to the head of an Eastern European country to the daughter of the son of the prime minister. Sorry, to the daughter of the prime minister. A nice fine of 180 million in order to get a telecom license for a Russian telecommunications company. And nobody knew the reason for payment, right? So this is where your FileNet drops in. That's just one example. You put them all together, it's multiple billions a year of fines that are dropping around. And it's mainly because you haven't got the documentation. Now, if you actually put the documentation there, what that means is lots of banks can do a lot more of high-risk business that's not really high risk. I don't know if you know what I mean. There's a catch-22 in this. What I'm saying is there's a hell of a lot of great business opportunity, highly priced and extremely lucrative. As long as you've got the paperwork, you can do it. So I think, you know, companies like FileNet, you know, I sit around, I've worked for the European Commission, I've worked for the European Parliament, I've worked for the European Central Bank, I've worked for SWIFT, I've worked for clearing systems, and I've worked for high-risk wallets in my life. And I look around and I see a lot of brilliant ideas out there in the crypto world. I think there's a massive opportunity for DeFi, for example. And I just don't understand why people don't understand that a little light marriage with the conventional world and some of these ideas would make a hell of a wallop of difference. And I'm always amazed to see that you get these new offerings and they're completely polarized. You've got this massive $1 trillion payment industry on the left-hand side, and you've got a load of guys who are trying to build an alternative currency on the right-hand side. And these don't marry. So it's kind of frustrating to see companies like FileNet struggle to establish a very strong business model. My cut is I don't really understand what they're doing. I think you can do a lot in P2P and video share and all of those things that got shut down, and stolen films and stolen media and stolen this and stolen that. You can potentially do wonderful things with those. But there's a lot of conventional things you can do with this that's got extreme high value, and I just don't see it being used. So that's my cut.
Interesting.
Yeah, I think it's interesting. The idea, like because you mentioned Swift. So Swift is essentially a messaging network. You just send a message between banks so they know that, and then the actual money is sent through like FedWire, like some other existing like wiring, like payment rails. So I agree with you that having documents would help. However, like Swift in itself, if you think about it, it's a permission network, not a decentralized network, but a permission network nonetheless, because you need to be a member bank to be part of Swift. So really the technology that would marry perfectly with the Swift network to enable the documents it's a permission blockchain and not a public blockchain approach like Filecoin and storage, which would bring about a ton of red flags from the point of view of the banks that would be extremely allergic to working on a public blockchain environment, especially if it's about putting clients' data on an infrastructure they don't control.
I don't know if I can speak, if I've got the mic.
Yeah.
Yeah, sure. All right. Yeah, no, Dan, the reality is there's 9,000 banks on Swift and 250 of them run the entire network by volume and mass. And the rest of them are there for the party. You know, it's just like having, what's the point in having an email system that only 250 banks can use? So they include all the others for a bit of fun. But 250 control the pipes and the mechanics. But the reality is actually, Don, on the point that you made, the majority of banks would rather not be on Swift. The majority of banks would rather have an alternative to Swift. They'd like to send their messages from A to B. And what they're worried about is everyone's policing their messages. So many of the banks want to be off Swift, particularly Chinese banks, Russian banks, Asian banks, Eastern European banks, African banks. None of them want to be on Swift. There isn't an alternative. So maybe, you know, you're right, it's public and it's not private. But I can assure you, if you had a public secure network and it could do what Swift would do, you'd have mass adoption almost overnight.
Yeah, completely agree. If you were able to, for example, do a private version of storage or Filecoin, by all means. But what I mean is like having random strangers running nodes that are essentially part of financial infrastructure. That's just something that, I mean, the bank's compliances are not going to pass. But I agree. I mean, there needs to be some type of technology that can mirror the existing infrastructure and ideally augmented beyond that concentration of power in, you know, the correspondent banks within the Swift network. That I completely agree with.
Yeah, well, there's a very interesting point, Dan. If you actually look at Swift and you break it down and atomize it, it's a very there's an 80-20 rule written across it. Like I told you earlier, there's 250 banks and they do 80% of the currencies or 90% of the total amount of volume. And then out of G10, if you break that down, it's about 86% of all the currencies by the 250 banks are G10 currency. You start to look at it and you think, you know, China's not going to make much of an impact on that, and Russia isn't, and they can't. Right, but let's have a look at two intrinsic messages. This is the important bit. So Swift doesn't actually send money. People often think it does. It doesn't send money. What it does is it sends instructions, e-instructions. So, Dan, if you wanted to pay me, you'd send what we call in Swift an MT103 message. The instructions would be clear to your bank that you want to pay Vince Power at a bank. And the other message you send is an MT202 cover payment. And this is where I think crypto could really cut in. The cover payment is a message between banks, and it's telling your bank is telling my bank where to take the bank's money in order to pay me in Spain, for example. So there's two messages. One is an MT103, which is an instruction, very detailed instruction saying where I've got a bank account to put money into it. But we're not actually moving money on the Swift network, not like Bitcoin and not like other stored value units that you've got in the crypto world. Nothing is moving in our world. What's actually moving is there's a second instruction saying, okay, I've got a bank in Spain that could pay Vince, and I've got an account there, so please take the second message, the MT202, and let's tell the bank in Spain to move some of the money I'm holding in the bank in Spain to Vince's account. Now, if you take that second bit, and you just replace it with a Bitcoin movement, you don't need the second bit. You can actually move mass transactions of high value for the bank. And you don't need to have a bank account in Spain because it takes 10 minutes. So, you know, there's a mass opportunity to sit on the same network, but to completely eliminate the correspondent banking element of it. And I don't understand why Ripple and other companies are always trying to let's just talk about Ripple a little bit. The flawed idea of Ripple is it's going to replace SWIFT. How can you take a covert industry with 250 banks, only 96% of a cooperative, and go out and tell the industry that you're going to have the liquidity to take it all out? Those 250 banks will never join Ripple, and they own the network. So Ripple's never going to get that. It's going to take a lot of stragglers out, and some of the smaller people in the chain. It's never going to take the big boys out. This is a closed user group. This is a shop. They're not going to play the Ripple game. So Ripple's got its approach wrong. But if you change that, if you were able to think of it, allow the messaging formats, allow the syntax, allow the membership of all the smaller members to work, and kill the correspondent banking side of it, that would work. And I just don't understand companies like Ripple because they don't understand my world. And they go off and they build something in a silo, and they think they've understood why every bank in the world would find it cheaper than SWIFT, which costs $2 billion a year to the banks, but that's peanuts. So it's very interesting to see the dichotomy of purpose, the understanding, fundamental understanding, the underlying liquidity in the business model seems to be completely flawed. I'm sorry I'm ranting on a bit, but this is what old men do at this time of day.
No, it's fascinating. I've actually been doing a lot of research on payment rails because that is something that is highly relevant for permission networks. And I've gone down the rabbit hole on anything, everywhere from integrations with payment providers, money service businesses, working with central banks for CBDCs, and of course, looking at FedWire, SWIFT, and all that, the traditional payment rails and how they could be integrated. So it's I found this world fascinating because like it's one of those things when you see it from the outside in, you're like, okay, I see these obvious things that should be fixed. Why aren't they fixed? And when you start like going into the details, you're like, okay, yeah, there's a lot of dirt to move here to be able to like effect change. And as you mentioned, there's some things that have been working the way they work just out of legacy. And then when new players come in, they're trying to replicate that legacy instead of actually addressing what is the optimal way of moving things. So to give you like a parallel example, within the equities world, some people are working with the DTCC to integrate blockchain with the DTCC so they can actually be bring the DTCC to the blockchain world. But the whole point of DTCC, it was created in the 1970s as a temporary solution while the world transitioned to digital securities so that you wouldn't need a central securities depository. So actually integrating blockchain with DTCC makes zero sense. So by the same idea, or let's say by the same token, pun intended, doing something as you mentioned within SWIFT, assuming that you're keeping that existing infrastructure, would be ill-guided and good reason.
It's an embrace of the wrong thing. So in SWIFT, there's basically two things that you need to know. It's basically sending messages, and it's not moving money. Is the first thing. And then it's sending an instruction, and this is the one that kills me always. Banks keep money with other banks. Okay, so the second message is all about moving liquidity. At the same time, you've got a 200 billion market cap of tokens, and it's all in the wrong place. It should be available to replace the correspondent bank network, but it's not.
Yeah.
So it's there, but it's dead money sitting in the wrong place. You can't use the liquidity. And that would make a massive difference. If the money was away, you wouldn't need correspondent banking on the SWIFT network, and you wouldn't need that second message. You just send the instructions to move money to people's banks, and you draw down on crypto liquidity that you'd already bought into. And if you needed to move it, well, it would take up to 10 minutes to move it. Worst case, I guess, if you moved, a couple of billion around the internet, crypto would work. So, I think the potential to do things is great, but I never understand why people start building new cities, when they don't understand the old one first.
Well, the reason they do is because it makes for a nice marketing push, right? And everyone who doesn't understand begins to follow it, and the price goes up, and everyone is happy, right? I think that's what they're doing.
I also call that pump and dump in some places. So
That's right.
Sounds like a good
Yeah.
idea.
Sometimes something new is well forgotten past, right?
Yeah. Okay, guys, thank you for this time, and see you the next week. Thank you for this great news about PayPal. I hope everything shall be great. Okay, see you. Thank
All
you.
right.
Thanks for the
See you
conversation.
guys.
Thank you all.
Take care.